Right, hi guys. Zaheer Anwari here on behalf of the Dynamic Trader. Can I just get a quick screen check and mic check, please, from administrator? Just let me know. Yeah, working good. Okay, fantastic. Right. Um, it's the 7th of December. Hope you're well. Hope you've all had a good week. If you have any questions regarding anything that I present today, then please, of course, put them in the chat box. Brief background on myself. My name is Zaheer Anwari. I'm a trend trader. Thanks, Maurizio. I'm a trend trader. What that means is I look for long-term opportunities in the market. So, I'm not a day trader. I'm not a scalper. I don't have any inclination to be glued to the screen all day, every day. What I want is to just have a few large winning trends every year. This idea that you need to be sat in front of the computer and making lots of trades, chasing money, chasing pips, it's a false economy. It's not necessary. It's what you're encouraged to do. If you go online and if you start searching for FX trading, it's what you're encouraged to do. And everyone seems to be trading on lower time frames. But if the success rate of trading is very small, we know it's sometimes reported that only 5% are successful, then what is it that they're doing that others aren't doing? And they certainly aren't day trading, because if most people are day trading and most people lose, then the 5% are not day trading. So you've got to look at what they're doing and start questioning, is there a better approach? And there is. And the answer for private traders is to be able to just take a few trades a year, high probability trades a year, and hold those positions for as long as possible. And not only hold them, but compound into them as they start returning you a profit. It's a very simple approach. Trading is very, very simple. The less you do, the more you make. And the most simple techniques are the most powerful. Don't feel that you need to clutter your screen with indicators, MACDs, RSIs, fibs, trend channels, Fibonacci circles. It's unnecessary. We want to keep it simple. We want to focus on price, and we want to be able to know when to trade and when not to trade. So understanding your market environments is crucial. So before I actually get into the analysis, what is the plan of action, if you like, for today? Well, first and foremost, I'd like to direct you guys to this ebook. So whatever I present today, there's certain elements of it that are mentioned within this ebook. This is a free ebook that I give out. It's written by my mentor, Anne Chapman. So I was taught by an amazing woman back in 2007. And it's a very comprehensive ebook. So you can see first chapter straight into the real meat on the bones, which is understanding the trading bias. Something that if you speak to the everyday trader, they have very little idea about. They think trend direction and trend bias are two different things. Are the same thing. They're actually two different things. So you can see in lesson 1 is a trading bias. Lesson 2 is establishing the trend. It goes into real detail into elements like support and resistance. Support and resistance are usually very, very significant, but most people get them wrong because they don't have any logic to the way they're drawing their support and resistance. Your trading should be void of any subjectivity. You should have clear, defined rules. If you don't have these clear, defined rules, then you're going to struggle. We live in a lawless environment. We have a massive advantage over institutions because institutions have government rules and regulations that they have to follow. Private traders don't, and because we don't have these rules and regulations, private traders then end up doing whatever they think is the correct approach, whatever they feel suits their personality. There's all of these reasons and excuses that people have adopted a particular approach. I hear it all the time. One of the most common approaches I hear is that find a trading style that suits your personality. That's actually incorrect. What you want to do is understand how the market operates and then adapt yourself to the market. So, is the market in a bullish environment? Yes. Look for bullish trades. What kind of bullish trades? Are you looking for pullback entries? Are you looking for breakout entries? Are you in a fast moving wave? So for those of you guys who like Elliott waves, I'm not into Elliott waves, but just to give you guys an idea, if you're looking for Elliott wave 3, which is that speeding driver, it moves very, very quickly. Then you've got a particular way of trading. You've got certain strategies that you'll use, certain ways of compounding. If you're in that Elliott wave 5 formation, which is a much slower moving trend, you may use a different set of strategies. You may compound and exit differently. So instead of trying to adapt the market to your personality, don't fall into that trap. Learn to adapt yourself to the market. Market is far bigger than we are as individuals. So you want to learn to align yourself with the market. This ebook will help you. So if you email me at the end of this webinar, or right now if you're in front of your computer, zaheer@zaheeranwari.com. If you email me, just put in FX Street ebook in the title. I will get this ebook I'll get this ebook over to you, and you can see it goes all the way through to lesson 12, which is the trading plan. Okay, so this is a comprehensive ebook. Guys, it's really changing the way people trade, this ebook. Okay, it's been around for a couple of years now, and it's really changing the way we as private traders change. There's no ebook like that out there. Beyond that, if you want an environment where you want to put this into practice, we then have a community, which is tdtpro.trade. Please check out the website. This is a community where you'll get strategies, you'll get watch lists and training in currencies and stocks. You'll understand how to compound, hold trades, manage a watch list, manage a portfolio, and you'll also be around some seriously good private traders, and that's the environment that you want to be in. Okay, and this is only £99 for a month. If you're here in the UK, that'll be plus VAT, or in the Europe, that'll be plus VAT. So it's £99 plus VAT for a month. It's cheap, and it's the perfect environment for you to get started. Treat it as a business. Start looking to invest into it. Okay, now let's move on and let's start looking at the charts. So, as already mentioned, I'm a trend trader. So what I'm looking for is long-term trends. Now, I always hear the argument that trends appear on all time frames. Yes, that's true to a certain extent. I understand that. But let's define a trend. And a really good way of defining a trend, guys, is by using fashion. Fashion is seasonal. It's every 3 months. If you think about it, you have your summer fashion, your winter fashion, your autumn fashion, your spring fashion. Every 3 months, the seasons change and the fashion changes with it. If we think even long term, we sometimes define fashion as periods. So we often talk about 60s fashion, 70s fashion. So we're talking about 10 years, a decade. If you look at beards now, the way men have beards, I mean, that's been around now for a good few years. So what am I trying to get at? What I'm trying to get at, that if you purchased an item of clothing that, say, cost you £2,000, and by the time you left the shop, which was 5, 10, 15 minutes later, the shopkeeper comes up to you and says, listen, your item of clothing is no longer in fashion. You're going to have to buy something else. You're not going to be too happy. You want to view your trends in the same way. Whenever you get into a trade, you want that trend to last for weeks and months. You don't want to be out in minutes and hours, or even a few days. You want to hold positions for weeks to months. To be able to do that, you need the right time frame. So if you look in the top right corner, we have the monthly time frame, bottom left corner, the weekly time frame, bottom right corner, the daily time frame. In the top left corner, I have my watch list. So you'll notice it's an extensive watch list. So I have the Aussie dollar, US dollar at the top, and it goes all the way down to the South African rand, Japanese yen at the bottom. It's an extensive watch list. Now, why do I have a big watch list? Because I want access to the best opportunities throughout my trading lifetime. If you only have the euro dollar on your watch list, you're only going to be trading the euro dollar, and the euro dollar is not always liquid. Let's think about it, guys. The euro dollar is the most heavily traded currency in the world. We know that. Yet if 95% of private traders fail, and most of them, if not all of them, are continuously trading the euro dollar, what does that tell you about trading the euro dollar all the time? That's not what trading's about. Trading's about understanding how to manage your watch list and to take the right instruments from your watch list and put that onto your trading portfolio. You want to rotate between trending currencies. So when one set of currencies are in trend, you trade them. When they go into consolidation, the next set of currencies will come into trend. A good way to view this, guys, is like a hawk. If you imagine a hawk, it hovers miles above ground, scanning the floor, looking for its prey. As soon as it sees its prey, which may be a rabbit, it swoops down, catches its rabbit, has a nice feed, and then goes back up into the sky looking for the next prey. If that hawk was hovering directly above ground level, it's not going to have the view to be able to see rabbits that may be a little bit further afield. It's only going to be able to see what's directly in front of him or her. So you want to look at yourself in the same way. You want to imagine that you're a hawk, but instead of looking at the ground looking for rabbits, you're hovering over the market. So you've got the foreign exchange market, you've got the stock market, which for me is the UK and the US stock market, and you've got the commodities market. And you're hovering high above these markets. And then as soon as you see the right trends appear, you swoop down, you have a nice feed. Once you've had your fill, you then go back up again and you wait for the next round. That's the way you want to be doing it. So you want to have a macro view of the markets and then go down and narrow it down to the right trending opportunity. So you have your macro view goes down to a micro view for several weeks and months, and then you go back up again. That's why it's essential to have a big watch list. Now, often people ask me, well, it must be really difficult to manage such a big watch list. And the answer, it isn't. It's actually very, very simple. And I'm going to show you why. To do this, we're going to go to the monthly time frame. Now, the monthly time frame is where I do three things. First of all is where I look for the overall trend structure. Is it trending well? Is it in consolidation? The overall trend structure. It also gives me a history telling me, does it trend well? So we're looking at the Aussie dollar, US dollar. You can see it trends well. Look at these periods of trend. Nice periods of trend. So the Aussie dollar, US dollar is generally a currency that's not too far from my watch list. Okay, the second use for the monthly time frame is to start developing a bias, an edge. In trading, nothing is guaranteed. So what we want to start developing are high probability environments. We want to be able to understand environments where we have more chance of making money than losing money. If we understand our environments, we will know when to trade. So when the odds are in our favor, we trade. When the odds are not in our favor, we stand aside. So as crucial as it is to make money, it's even more important to understand when to protect your money. The reasons why people blow their account is because their emphasis is not on capital protection. Their emphasis is on making money, and they'll risk whatever it takes to make money. Whereas a good trader understands that the future is out of my hands, it's out of my control. So I can't guarantee how much money I'm going to make because I don't know how far the market is going to trend, if at all. So what I'm going to do is focus on my downside. So when an environment presents itself, I'm going to risk small. I'm going to have a well-placed stop loss. Until that environment presents itself, I'm going to stand aside. Once I'm in a trade, I then want to hold those trades for as long as possible. For as long as that price dictates that it's in trend, I'm going to hold on to my positions. And how can we dictate how long the market's going to be in trend for? There's a very simple technique which I'm going to share with you. So first of all, let's look at these pink lines. These pink lines help me to start developing a bias. So what do these pink lines represent? The high, the low, and the closing price of the previous calendar year. So January to December 2015. That is the high of 2015. That's the low. That's the closing price. We're now coming to the end of 2016. When 2017 starts, these pink lines will adjust. So they will readjust to the high and the low and the closing price of 2016 when 2017 starts. At the moment, this represents 2015. What I want to see is price trading outside of these pink lines. So if price is trading above the pink lines, I have a bullish bias and I'm looking for long opportunities. If price is trading below the pink lines, price has a bearish bias. I'm looking for shorting opportunities. If price is inside the pink lines, this is where I'm in a consolidating market, and this is where I stand aside. There is no edge. There is no bias. In trading, you must have an edge. And not only must you have an edge, you must know how to define your edge. You must know exactly what criteria makes your edge. If you can't define what your edge is, you don't have one. And if you don't have an edge, you'll get eaten by someone who does. And that's why traders who don't have an edge, or in other words, are gambling, are continuously blowing trading accounts. In 10 years of trading, guys, end of this year, beginning of next year, it's going to be about 10 years pretty much that I've been in the market. In fact, it will be 10 years because I started at the end of 2007. So it's coming up to 10 years in trading. So in 10 years of trading, I've never blown a trading account. That isn't because I'm some amazing trader or some kind of wizard. It's just simply because I understood what I understood. I placed my emphasis on education from the very beginning. I understood certain elements of the market before I actually started executing trades. Most people execute trades before they understand what they're doing, and that's why they blow accounts. So something as simple as understanding that if price is inside the range of last year, we stand aside. So now if we go back to managing the watch list, if you go to Aussie dollar, Canadian dollar, it's inside the pink lines. So I'm not interested. Aussie dollar, Swiss franc, inside the pink lines. I'm not interested. Aussie dollar, Japanese yen, inside the pink lines. I'm not interested. Aussie dollar, New Zealand dollar, inside the pink lines. I'm not interested. So we've literally just gone through all the Aussie currencies, 1, 2, 3, 4, 5, and we've dismissed them because they're all trading inside the pink line. So you can see how easy it is to manage a watch list when you can use this simple technique. Now, which currencies are trading outside of the pink line? So let's look at the euro pound. So the pound currency took a real beating this year. In fact, it's been taking a real beating for quite a while. And the euro pound was a currency that many trend traders were long on. And then after the US election, the pound started gaining strength again. So let's take a look at this. We can see that the euro pound is trading outside of the pink lines, so it has a bullish bias. Now, why has it failed at this level and why is it reversing? The answer is round numbers. So you can see here 0.9, which is acting as a resistance level, and that's why price has reversed. We've also got a bearish engulfing candle, and potentially we may see further weakness. So the other use for the monthly time frame is to look for support and resistance. A lot of people draw their support and resistance on lower time frames, 1 hour, 4 hour. For me, there's too much noise, there's too many candlesticks. It's just very unclear what price is suggesting. Whereas on the larger time frames, again, when you step back and have that macro view of the market, you have a very clear idea of what the market is doing. Now, going back to what I was saying earlier, which is you must have very clear, defined rules as to what makes up your technical analysis. For me, when it comes to support and resistance, pivot levels with a minimum of 10 bars on either side act as major levels of support and resistance. So if you move to the left of each of these lines, there's a pivot. So if you move to the left of this bar, there's a pivot. Move to the left of this, there's a pivot. Move to the left of this, there's a pivot. Each of these pivot levels are major pivots because they have a minimum of 10 bars on either side. If it's green, that means there's a minimum of 10 bars on either side acting as support. So these green levels are pivot support, the red levels are pivot resistance. And for me, these are major levels of support and resistance. What you will notice is that often these levels appear near round numbers. So if you look at the high point, it's approximately near the figure 1. If you could look at these two, 0.9. If you look at these two, 0.8. Now remember, round numbers and support and resistance levels in general, they're not hard levels, they're zonal areas. So there's a range around support and resistance. So don't expect price to always perfectly bang on. There's no such thing as hard levels and soft levels. Support and resistance levels are zonal areas. If you understand that, that will remove a lot of the emotion and movement that may happen around these levels. Okay, now once price is in a trend, going back to what I was saying earlier, which is once price is in a trend and we want to hold those positions for as long as possible, how do I do that? The answer is by looking at round numbers. So if you look at this bullish trend to the upside, we had 0.7 right here. Price then moved towards 0.8. You can see right there we had, if I just expand the chart, if I just move it across, we had price come from 0.7, which is a support level, towards 0.8. Now look what happened at 0.8. We had a correction. Hardly surprising because we had a round number. We had a correction based on pivot support. So if you look at the low of this wick, very close to the low of this wick, and we then had this big bullish move, and I believe this is the month of Brexit. Since then we had a continuation. Price came to 0.9. Now when price broke above this high and the round number 0.9, we would have liked to see price move towards the figure 1. But this is the thing about the market, guys. We don't know when the market is going to reverse. Until then, We keep on going in that direction of the trend. You don't ever want to predict a reversal. Don't try and trade tops and bottoms. It's a very difficult way of trading. Trade in the direction of the trend. Trades are short-lived. Look at this reversal here. These two red bars compared to 1, 2, 3, 4, 5, 6, 7, 8 green bars in the direction of the trend. Why do you want to try and predict this reversal or even try and trade this reversal when you've got the whole trend going in your favor? And how do you protect yourself then? Once you're in the trade, you use trailing stop losses. So when a reversal happens, you get triggered out by the trailing stop loss. The key is to have wide stop losses. Okay, now if we go to the weekly and the daily time frame, the weekly I have the 200 moving average. The daily I also have the 200 moving average. And I have our proprietary trend filter. So you can see that I don't have standard red and green candlesticks. I have a trend filter that's giving me whole periods of red and whole periods of green. So what I'm looking to do is put the bias and the trend together. You see the 200 moving average is used to give me the overall bias of the market. So if price is above the 200, I'm in a bullish bias. And if price is below the 200, we have a bearish bias. This isn't a technique I've developed or I've invented. This is a technique that comes from before the internet. Old school traders who didn't have software, who didn't have time to day trade because charts were drawn and calculated by hand. And so it was a very slow process. People didn't have time to trade. The 200 simple moving average was a proven indicator of the long-term trend. Institutions use this same technique today. It hasn't changed. And as private traders, we want to use that same technique. So I want my trend filter, my proprietary trend filter. You can see it actually starts green here. But what I want is the trend filter to be green above the 200. That's when I look to go long. And I want it to be red below the 200. That's when I'm looking to go short. And I have the same logic on the daily time frame. So I've got the 200 moving average. And again, you can see the proprietary trend filter. So what am I looking for? I'm looking for price to be above the pink lines in a bullish market, above the weekly 200, above the daily 200. So that's looking good. Bullish bias on the monthly, bullish bias on the weekly, bullish bias on the daily. What I'm then looking for is the trend filter to be green on both the weekly and the daily. So we've got a green trend filter on the weekly and we've got a red trend filter on the daily. This does not represent alignment. Now, this does not necessarily mean I don't take the trade. What it means is that if the trend filter is the opposite color to the trend filter on the weekly, so we've got green here and red here, this will then be presenting me with a possible pullback trade. If the trend is green and green, then I'm looking for breakouts. If it's the opposite, which is green and red or red and green in a bearish market, then I'll be looking for pullback opportunities. This is my point of what I was saying earlier today, which is adapt yourself to the market. Don't try and adapt the market to you. Look at what the market is telling you and then do three things. Either stand aside or take the trade. Now, if you take the trade, are you going to trade using a breakout strategy or a pullback strategy? It's a very, very simple process. And with each strategy, you've got your entries, your stops, your target levels, your compounding levels, your exit management. This should all be pre-thought out before you actually start executing any trades. You don't want to just take a trade and then figure it all out after. You must be slow, you must be methodical, everything must be pre-thought out. So the euro pound is now finding support at the daily 200. We're now seeing a bounce to the upside, and this is a potential entry. So several traders may have already gone long into this. They will have been triggered into a little bit of profit today, and they're looking for this ride back up again. So the euro pound, a potential opportunity to go long based off support. Okay, the next currency that we want to look at is the pound US dollar. So this is the long-term bearish trend, guys. So you can see from 2014, it was at 1.7 round number, which is acting as a level of resistance. Again, no coincidence. This is not just some random level. This is 1.7, which is the round number. And what we've had here is a head fake. Price broke above the high of the consolidation. We had a price fail at this point here with the round number acting strong, and then market weakened. came towards 1.5. This was a very profitable period. We extracted some good profit from here. Price then had a bounce towards 1.6, which is round number resistance. We had this next leg down towards 1.4, which is support. We then had a bounce up towards 1.5, which is acting as resistance. And then we had the next leg down. And look at where price is currently finding support, 1.2. Perfect example. There is nothing unusual about this trend. It's moved exactly as a trend should. Trend, come to support, bounce, fail at resistance, break through, support, come and retest support, which is resistance, next leg down. If you do not embrace the natural features to the market, if you do not allow the market to do what it does naturally, then you will never ever see consistency, and you will never grow an account, and you will never achieve the goals that you want to achieve, which I am sure for a lot of people is to become a full-time trader. Okay, now if we look at the weekly time frame, we're below the weekly 200, trend filter is red, we're below the daily 200, and the trend filter is green. And we can see that it has come to a level of support, but not one that I would look to take. This is not a pullback that I would look to take. So if we cast our mind back a few minutes, I said that if the trend filter is the opposite color to on the daily, is the opposite color to the weekly, then we may look to take a pullback. I don't like the quality of this pullback. It's very messy, it's very choppy. I like neat, clean pullbacks. But if this holds strong, then we may see further weakness, a break and a close below this pivot support, which will also be the round number 1.2, and then we can start looking for shorting opportunities. Okay, if we move on and look at the pound Aussie dollar, again, now remember, currencies, they move in groups. So if the pound dollar is doing something based on the pound and not the US dollar, then all the pound currencies will be doing the same thing. Pound dollar, pound Aussie, pound CAD, pound Swiss, pound yen, euro pound, they'll all be doing the same thing, because if the pound is weakening, then all the pound currencies will be weakening. So we can see pound Aussie dollar looks very similar to the pound dollar, which we just looked at. Bearish trend. Where did it fail? 1.6 round number. Where is it currently? 1.7 round number. No coincidence. These aren't random levels. These are natural features to price. Below the weekly 200, trend filter is red. Here is your pullback. Now this is a much cleaner pullback towards 1.7. If you like trading on weekly charts, then this is the kind of pullback that you're looking for. Daily, we can see the pullback in more detail, and it's not a clean pullback. So if you were looking to take this as a short, even though it's potentially weakening, remember, we're looking for the path of least resistance, or in this case, the path of least support. And there's a lot of support levels ahead. Okay, so you want to be smart with the trades that you take. I was short on the pound Aussie dollar. It went a little bit in my favor, where I eliminated risk. I then eliminated risk, and we can see that price has then since reversed and stopped me out. So at the time of taking this trade, which was this move here, and you can see we had an engulfing candle, price was suggesting further weakness. It did weaken. As soon as price went into a profit, I eliminated my risk, and since then the market has reversed. I'm not looking to get into this now until we get a break and a close of this pivot support level. Okay, let's move on. Let's have a look at the pound Canadian dollar. So pound Canadian dollar, again, will be doing something very, very simple. Weakness to the downside, 1.6 acting as support, 1.7 acting as resistance, as is this CAT 10 level. Below the weekly 200, trend filter is red, so the weekly is looking good. Below the daily 200, trend filter is green. We have had a pullback, but this is a pullback that is far deeper than I would like. So if you actually have a look, we've actually got some kind of resistance level. When price was heading up, we had some kind of resistance level. Price broke through that resistance, came back to retest the 1.7. But based on this level here, this is a reason why I would not want to be trading pound Canadian dollar. If it breaks through and we get a break and a close below this pivot, then we can start looking for shorting opportunities. All right, pound Japanese yen. Now the pound Japanese yen is a currency that handed out very good profits from one below these pink lines. So remember, when price is trading below those pink lines, I'm looking for shorting opportunities. I made good profits on the pound yen this year, and we can see that it's weakened all the way through to 120 approximately. Here's a good example of how it acts as a zonal area. So you can see it's a little bit above 120. These two cat 10 levels are acting as support. Pullback towards the 140 round number zonal area. Above the weekly, below the weekly 200, trend filter is red. Below and above the daily 200, trend filter is green. This is an opportunity that was a little bit too deep again for my liking. You can see that we've got several support levels ahead based on this pivot, this pivot, this pivot. A lot of support levels ahead. So the pound Japanese yen is not one that I'm looking to trade just as yet until we get a clearer bias and a clearer trend direction on this. Okay, now the pound New Zealand dollar is a currency that I'm short on at the moment, and we can see why. Price weakened all the way through the all-time low, and has come back last month, came back to retest it, and is currently finding indecision at that resistance level. If you go to the weekly, below the weekly 200, trend filter is red. There's your pullback. And if you go to the daily, there's your daily chart. There's your pullback. Okay, it's actually quite, apart from this messy area here, it's actually quite a nice looking trend. You can see nice, neat trend to the downside. Nice, neat trend to the downside. What is this whole area? This whole area is based on NFP. Excuse me. This whole area is based on Brexit. So the uncertainty before Brexit, then we had the release of Brexit, continuation, and then the market's just been going sideways. So my advice, guys, regarding fundamentals, before I forget, this was something that I wanted to mention earlier. My stance on fundamentals is that I do not trade them. I do not factor them into my decision. I do not trade them. I'm simply not interested in trading the news. What I am interested in is understanding when certain news items are going to be released and then standing aside when those markets are going to be released. So let's take Brexit, for example. When Brexit approached, I closed my positions. So for very, very good profit, I closed my positions before Brexit. And then once Brexit was factored into the markets and normal patterns resumed, I then started looking for opportunities. So pound New Zealand dollar, I went in short of this candle here. So what we've got is okay, so what I'm looking for now is this resistance level to hold strong. So let me just draw this in. Okay, there you go. You've got a support, which is now resistance. We had a nice clean pullback to that level of resistance. We had a bounce to the downside. And this is where I took my short entry. I was triggered into the trade on the next bar. And you can see since then, it hasn't really gone anywhere. My stop loss was above the round number 1.8 in case price came back to retest it, which it did. And I'm now looking for further weakness. So what makes a good trade? Some people will be looking at this going, well, you're stuck in consolidation. You haven't made any money. That's a bad trade. That's incorrect. That's not how you want to look at it. How you want to look at it is a good trade is one where you follow your trading plan regardless of the outcome, because the outcome is random. The outcome is not guaranteed. So at the time of placing my trade, which was on this bar here, I had my criteria. Everything was met. If I look at the monthly chart, I was below the pink lines. If we were on the weekly, below the weekly 200, trend filter is red. Below the daily 200, trend filter was green, but I didn't like the, a trend filter is red, and then it turned green at the pullback, and that's what I'm looking for. Red on the weekly, green on the daily, and the pullback should happen to a significant level of resistance in this case. And this offered the opportunity. I took it, but it hasn't returned a profit. What are we seeing so far? Well, we're seeing weakness so far today. If that continues, breaking a close below this pivot support, and I will start looking to add further positions. Okay, let's have a look at the Turkish lira. So the Turkish lira, it's a currency that I'm in. Now, I'm not big on exotics, but there is the odd time where an exotic may present itself, and if the odds are good and the risk to reward is there, remember trading is all about risk to reward. If the reward is worth the risk, then I will take the trade. So let's start with the monthly time frame. Oops, excuse me. Okay, let's start with the monthly time frame. We can see that it wasn't a long-term consolidation. So going back from 2002 all the way through to 2013, that's an 11-year consolidation. The bigger the consolidation, the bigger the breakout. So we can see since 2013, 2014, this has actually been trending, and it's been trending quite neatly. We had a bit of a pullback, then we had this nice leg up, bit of a consolidation. Now look at the consolidation, round number 3. This isn't a random level. We then had a breakout to the upside. Now, as the trend prior to that consolidation was bullish, we fancy a breakout to the upside. That's our bias. We would like to see a continuation of the trend. It's not guaranteed, but there's more chance of that happening, and this is an example. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. So what are we looking for now? Well, I'm already long on this, and I've already got positions running on this long. What I'm now looking for, we can see we got a correction. Now, if I get a good tool, which is the regression trend channel, and if I apply the regression trend channel to the start of the trend, which is here, and if I just apply it to the top bar in the trend, we can see that the price is respecting the trend channel very, very well. Now, one use to the regression trend channel, which is a very useful feature, is Pearson's R. So if I just check that, show Pearson's R, it's telling you pretty much a percentage of how much a price is staying within that channel. So at the moment, 94%, 95% approximately, if we round that up, 95% of price is staying within that channel. So even though we're having a pullback, as long as price remains within this channel, then I'm happy to let my positions run. Now, what are we looking for? Well, I'm looking for a support level. So there's a support level, there's a support zone, there's the immediate support zone based on pivots. I'm looking for these immediate support levels to hold strong, and then a bounce and a correction back in the direction of the trend. So if this support level holds strong, I then like to see a bounce. A break and a close above this level will suggest a continuation of the trend. So this is where we really must start to apply patience. You do not want to be trading long at this moment in time. You do not want to be trying to predict a reversal and thinking that price is going to be heading down. The bias is in the direction of the trend, which is bearish. Above the pink lines, above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. So everything is suggesting bullish momentum. To actually get into this now on the pullback and to trade this short, then that's a mistake. You want to be looking for long opportunities. You want to be going in the direction of the trend, not this correction. Okay, let's move on to the Swedish krona. So that's the US dollar, Swedish krona. Again, very, very straightforward. Bullish trend to the upside. Very profitable trend that we traded back in 2014, 2015. When the euro dollar was weakening, the US dollar, Swedish krona gained strength. They're inversely correlated. You can see price went through a consolidation with the the round number 9 acting as a resistance level. But as the trend prior was bullish, we favored a breakout to the upside. Why is it stalling? Well, we have a support level, we have a resistance level right here. And you can see that price is reacting to that resistance. What we're looking for is this support level to hold strong, for price to reverse and a break and a close above this level. Then see price move towards 10 and 11. So patience for now and let price dictate its move. Above the weekly 200, trend filter is green. Above the daily 200, trend filter is green. So just like the Swedish krona, you can see we have a nice trend to the upside. Price is finding resistance, which is expected, but a break and a close above this pivot high is what we're now waiting for. So if I just draw in some support and resistance levels, we can see that we have a resistance level here, which is currently acting as a support zone. And we also have the high bar, which is, I think it's that one. Yeah, that's acting as resistance. As the trend is bullish, we favor a break and a close above this resistance level. Okay, so that's the Swedish krona. The last currency we'll look at is the euro dollar. Okay, so euro dollar, as we know, most heavily traded currency in the world, as I already mentioned. Here is a bearish trend. Here is a consolidation. Why you would want to be trading this area is beyond me. Why would you want to be trading this area when you could be trading stocks like Nvidia? So Nvidia is a stock that I'm long on, and it's returning me very, very good profit. So in the same time that the euro dollar has been in consolidation, the same time that the euro dollar has been in consolidation, which as you can see, it's done nothing. The US dollar, the stock of Nvidia has gone from $40 to almost $100. That's so far this year, and I've got multiple positions running, and all of them now are returning me a good profit. Very, very good profit. Some of them have been returning. Some of them have been running since $40. Okay, if we look at the weekly, below the weekly 200 trend filter is red. Below the daily 200 trend filter is red. So the weekly and daily are looking good. They're moving in alignment. But until it breaks out of this level here, until it clears this floor, we don't want to be trading it. And you can see how price is reacting. It's bouncing to the upside. If you go to the daily, we can see that bounce in more detail. And that big reversal, so you can imagine this was a big red bar at one point, and it reversed, and it's now a green bar. The reason why it's red is because my trend filter is sitting over the top. But that actually was a big green bar. Look at the total reversal in a single day. Move to the downside and then a push back up again. And the reason for that was because of the result of the referendum in Italy at the weekend, and so this was factored into the market on Monday. But on the grand scale of things, guys, if we go to the monthly time frame, that movement is tiny compared to the overall direction. Look how bearish that trend is. Consolidation. This is nothing more than a bounce of support from a technical perspective. If it clears out of support, so we want to break in the close below the support level, we then want to see price move towards 1, 0.9, 0.8. But this is where we must apply patience. Okay, I think that is everything that I wanted to go through. Let me just have a look and see if there are any questions. What is your forecast on Nvidia? My forecast for Nvidia, good question. Let's bring up the chart. So my forecast for Nvidia is this. As you can see, the trend is nicely bullish. Nice, clean trends. Now, notice one thing, guys. It doesn't move in a straight line. What most people want is, boom, a big move to the upside. Look at it. It moves. It ebbs and flows. There's an overall direction, but it's got these neat, clean pullbacks in the trend. These pullbacks are part and parcel of trading. Not only should you expect them, you should embrace them, because each time it breaks out, it offers you an opportunity to compound. So if I draw all the high points where price has broken out, you could see all the potential opportunities you have to compound. So each time it creates a new high, compound, 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 compound. All right. Of course, you may not take all of them. You want to be strategic. Now, going back to what I was asked, which is what is my forecast? Well, price has moved from $40. If we go back to the monthly, it cleared the all-time high, which is 2007. It cleared the all-time high, which was approximately $40. So when it broke through $40, it went to 50, 60, 70, 80, 90, a little bit of uncertainty around $90, but we can see the trend is coming in again. 100 is a major level of resistance. That is where price is heading towards. If it bounces from 100, then I'm going to look to exit my positions and take the profit that I've made, because 100 is a figure. It's a strong level of resistance. Ideally, what we want to see is price make light work of this. We want it to break through 100 and then move towards 150 and 200. So that is my forecast. Either it's going to bounce from 100 where I'll exit, or I'm looking for price to break and close above and continue. One thing to note, guys, support and resistance levels will get broken when price is in a trend. Let's have a look at another stock. This isn't a stock that I'm in at the moment, but this is a stock that I'm looking to trade when price sets up. Why? Well, first of all, look at the history. Does it trend well? Yes. Trend, trend, trend. In recent years, it's been in a long-term consolidation. Now, this isn't a bad thing, because the bigger the consolidation, the bigger the breakout. So the fact that this has been in consolidation for, I don't know, 5-6 years, the fact that this has been in consolidation for 5 or 6 years means that there's going to potentially be a big move to the upside. If we go to the weekly, above the weekly 200, trend filter is green. Now it's the daily that's looking very interesting. There's your choppy movement. There is your trend coming in. Now look at this. We had a gap up over 100. Price has come to retest that 100 level. What we're now looking for is moves to the upside. A break and a close above this support level, which is, I'm sorry, a break and a close above this resistance level, which will then be support, will then offer an entry. Now, I may not get in on that first breakout because what I want to see is this trend prove itself. Once this trend clears 110, which is this level here, then I will start looking to add positions. Another stock that I'm long on is Zion. This is a stock that I've recently been triggered into. So if you have a look at Zion, again, trend, bearish trend, consolidation. The bigger the consolidation, the bigger the breakout. And we can see price potentially going all the way to $90 because that was the high. Above the weekly 200, trend filter is green. Now look at the way it's trending, guys. It's trending really well. If you go to the daily time frame, above the daily 200, trend filter is green. I have positions running now, which are just in profit. I'm now looking for further opportunities to compound, and I'm probably not going to compound until after $50. Okay, I've also got some positions running on some UK stocks. Let's have a look at Boohoo, for example. I'll just do one more stock, and I'm conscious of the time. Let's do one more stock. So Boohoo, which is a UK stock, you can see now bullish trend to the upside. Very, very good profit that has been handed out. And look at where it's trading now, guys, above 100. Currently struggling around 120. We're acting as a support level. So again, it doesn't matter what you're looking at. A currency, a stock, a commodity, it doesn't matter. A chart is a chart. If I hide what I'm looking at, if I remove this and you simply look at the chart, it doesn't matter what it is as long as you're applying the same philosophy. There's your green trend filter. There's no weekly 200 because there's not enough information. So it's a very new stock. Right, daily, there's your nice clean trend. Now I've got positions running again, a break and a close above this resistance, and I'll start looking for further opportunities to compound. Okay, guys, I think that is everything. Okay, so thank you all very much. There aren't any questions I don't see coming through. Again, if you want the ebook, please email me on zaheer@zaheeranwari.com. So it's just my name, zaheer@zaheeranwari.com. If you want training, guys, please check out the following website, which is tdtpro.trade. I would highly recommend giving this a chance. Yes, of course, I will sort that all out for you. Maurizio, I'm going to send that over to you, okay? No problem at all. If you want to connect with me on Facebook, guys, please search for my name. So Zaheer Anwari, I've got my own Facebook page. I've got, my own Facebook profile. I've also got a Facebook page, which is called City Trader Lifestyle. Now, it's not because I'm a city trader, I'm a private trader, but I live in London, and hence the name, City Trader Lifestyle. So I share a lot of information on here, images of people that I've been training this week, charts, etc., that have been going up. So there's a lot of useful stuff on here. It's quite a new page. It's only about a month old, but there's information going up on there. We've got our own Dynamic Trader page as well, with lots of information on there, guys. So please please have a like of that. I'm on Instagram, which is fx.mentor. So again, if you're on Instagram, I share a lot of information on there. And I'm also on LinkedIn. So please search for me and add me on LinkedIn. So I'm pretty much across all social media, Twitter as well. If you search for my name and Dynamic Trader, we're on Twitter as well. Okay. Thank you all very much, guys. Tito, Sandy, Pan, lovely to have you with us again on this webinar. FX Street, thank you for allowing me to present as always, and see you guys next week. Have a lovely end to the week. Smart trading, focus on capital protection, wait for the opportunities to come to you. Take care, guys. Bye bye.